Welcome everyone to this Masterclass Explainer. Today we're putting on our corporate financial compliance hats to audit the absolute lifeblood of a nation's economy, central government revenue. We're going to bypass all the noise and conduct a really rigorous, high-level look at exactly how a government funds itself. We'll be strictly focusing on the statutory frameworks that keep the national balance sheet in the black.
Okay, let's dive right into this and establish the stakes. When we talk about government receipts, we really aren't looking at some perfectly diversified portfolio of equal revenue streams. Just look at that massive 89% slice. Tax revenue accounts for roughly 89% of all public receipts for the central government. The remaining 11%, well, that's literally everything else. Dividends, interest, fees, the whole shebang. So if you want to understand national finance, you absolutely must master taxes, because tax revenue is, without a doubt, the undisputed primary engine of the government.
Here's our structured agenda for today's session. 1. The revenue engine. 2. The core concept. 3. The sixth tax tour. And finally, 4. The national framework.
Let's kick things off with Section 1, the revenue engine.
Moving right along to Section 2, the core concept.
So fundamentally, a tax is a compulsory charge or payment imposed by the government on individuals and corporations. And I want you to mentally circle that word compulsory. From a strict compliance standpoint, this is definitely not a donation. It's not some voluntary subscription you can just opt out of. It is a mandatory statutory obligation enforced by the state. You operate within the jurisdiction, you comply with the charge. Period.
Now for Section 3, the sixth tax tour.
All right, here is your roadmap. We're going to hit the 6 main taxes imposed by the central government. That's taxes on income, corporation tax, customs duties, central excise duties, service tax, and finally, GST. Let's break down the compliance parameters for each of these, starting right at the individual level. Pillar 1 is personal income tax. This one is levied directly on the income of individuals, as well as joint Hindu families, and it casts a really wide net over various sources of wealth generation. Whether that's your monthly salary, the income generated from a house property you own, or profits from your personal business or profession. Basically, if you are an individual generating wealth, this pillar is going to capture it. Moving up the corporate ladder, Pillar 2 is corporation tax. This is a direct tax levied specifically on the income or, the profits of companies. And definitely note the jurisdiction here, because it applies to both domestic and foreign companies operating within India. If a corporate entity is extracting profit from the Indian market, they are strictly liable under this pillar. No exceptions. And this brilliantly illustrates how our next tax acts as a sort of financial gatekeeper. Pillar 3 shifts our focus straight to the national borders with customs duties. It's basically split into 2 directional flows. You have import duties, which are taxes imposed on commodities entering the country, and then export duties applied to commodities leaving the country. So it's purely transactional, based entirely on crossing those sovereign boundaries. Now contrast that with Pillar 4, central, or union, excise duties. While customs deals with borders, excise duties are focused entirely inward, on domestic manufacturing. These are levied by the central government, specifically on commodities produced within the country itself. As a compliance officer, you'll note these duties are historically confined mostly to industrial products rolling right off domestic assembly lines. But, as we all know, we don't just live in an industrial economy anymore. We live in a service economy. And that brings us to Pillar 5, service tax. This is levied not on physical goods, but on services provided by people and entities. We're talking about massive economic drivers here, like the hospitality sector with hotels, telecommunication networks, port services, and of course, specialized banking and financial services. Which leads us to our final section, Section 4, the national framework. Now, what's really interesting about this is that managing all these distinct pillars can create a highly fragmented, honestly pretty chaotic compliance landscape. To address this, we have the Goods and Services Tax, or GST, which really attempts to consolidate the whole system. GST is a comprehensive, uniform value-added tax covering the entire life cycle of a product or service, from manufacture to sale all the way down to end consumption. It operates at the national level, replacing a web of localized charges with a uniform structure of tax rates across the entire country. It's essentially the sweeping consumption tax designed to streamline that massive 89% revenue engine we talked about at the very beginning. So we've audited the core definition, and we've walked the 6 tax tour, all the way from personal income to the sweeping national framework of GST. Knowing that this is a strict, compulsory system generating nearly all of the government's power, I want to leave you with this final provocative thought. When you look at your next paycheck, your next corporate filing, or even just your next simple everyday purchase, How does this compulsory framework of 6 pillars shape your own daily financial footprint? Thank you so much for joining me for this masterclass explainer. Keep analyzing, and I'll see you next time.